Good morning, everyone, and welcome to today's edition of Frontier Opening Bell here on Frontier Africa Reports. I am Bosin Omofaye here in Lagos, Nigeria. Hope we all had a great weekend. Let's get this new week started. Let me just introduce you very quickly. Ali Khan Sachu is live on the show this morning from Nairobi. Good morning, Ali.
Morning. Good to speak to you.
Thank you so much. I think we had a whole of a crude oil story to oil our weekend. That was on Saturday. I'm sure that is one conversation we're going to touch on. We expect a few of our panelists to join us for today's show within this conversation. So let's give you a quick roundup of Africa's major markets for the week we just finished. Look at the equities indices table. Nigerian market finished about 1% in the negative territory. The BRVM in Ivory Coast was 0.46% in the positive reading, while the Egyptian market was 1.89%, the second biggest in terms of movement. The Kenyan market finished Friday 0.29%, and the South Africa GSE continued to pipe ahead nearly 3%, 2.85% reading on its all-share index. That's a quick rundown of some of the major African markets we cover for you here on a daily basis. But let's take a look at East Africa, where we're starting the conversation with Ali. Look at the Kenyan market. The story just around the weekend was that Kenya is now the third largest economy in Africa, coming after Nigeria and South Africa, the two biggest contenders. Ghana is now coming through. Ali will give us a bit of a background into how Kenya has secured a third position in terms of GDP numbers. But one story that came in through the weekend was that African markets performed very nicely in the month of May. African equities almost wiped out the COVID-19 lockdown. On equity side, we had major performance. On the bond side, 7 of the 12 best performing developing countries' bond markets were in Africa in the first quarter of this year. And in terms of currency as well, the South African rand has gained about 10% since around mid-March. So how did African stock markets piped hot in the month of May? And that is one interesting story we're getting Ali to speak to us on about this morning. Meantime, the Kenya Central Bank and the Treasury reopened bids for 40 billion shillings to bonds to back the budget for 2020-2021. Meantime, the Tanzania market closed with the market with no shares traded. That grabbed the front page of some of the newspapers in Dar es Salaam this morning. Quite interesting story. Ali, should we start from Dar es Salaam? Why did no single transaction on the Dar es Salaam Stock Exchange cause such a made such a big splash on the front page of the newspaper?
Because I think it's never ever happened before at the Dar es Salaam Bourse. So it was quite a dramatic event. It caught everybody's attention. It coincided with some footage of President Magufuli saying that basically the COVID was defeated and there was no COVID in Tanzania. This was played around social media. So I think it's a combination of stories where people are just wondering how he was able to be so confident about making that call around COVID, because many folks have found that the virus is a formidable enemy. And Tanzania, of course, has taken a herd immunity approach to the whole thing. It's difficult to believe that they've overcome it so quickly just from looking at the science of the virus. But yes, you're quite right. Front page of the Citizen, which is the daily in Tanzania, no trades at the bourse. And I think it speaks to the fact that it's quite a local market, and it speaks to levels of confidence lacking amongst local investors, I think, at this time. Given this scenario that I've described to you.
Yes, I think Tanzania, Uganda, and Kenya has an integrated market, as it were. So there are a number of cross-border listings and all of that. How does it work, this integration of these three East African markets, Ali?
So there was a big push to do precisely that, to try and integrate these markets. But, you know, just like the East African community, we've had a little bit of divergence amongst these countries. So there was this a flurry of cross listings that happened where, you know, big companies also listed themselves in Uganda primarily and in Tanzania. But there's been very little liquidity on those shares in outside the home jurisdiction. In fact, you've had massive price divergences, and in a liquid market, you would have thought people would try and exploit that arbitrage opportunity, but there's just no volume outside the home market. So it hasn't worked so well. I think they might have another go to try and push that, but for now, it's very much the activity is in the local jurisdiction of the company. You touched on a series of points. Just to briefly mention, here in Kenya, bad loans are at a 13-year high, restructuring $3.66 billion. And this has obviously put a lot of pressure on the banking shares, which have underperformed quite dramatically. But that's a 13-year high, worth just noting. You and I were talking about South Africa briefly, this first time that they've gone to the IMF, big market request, $4.8 billion, much bigger than anyone else in sub-Saharan Africa. And Boason, remember that the ANC, the party, has been very against any request going to the IMF. So I think it speaks to the seriousness of the situation in Pretoria as we speak, that they've bitten the bullet and they've gone for that. And again, I was thinking about this speaks to the return of the IMF. If you look today, everyone has got their hand out with Mrs. Georgieva at the moment. And I think South Africa must be...
A quick one, Ali. How did Kenya get the third position in terms of the GDP size on the African continent? Give us a minute of that quickly.
So really, I mean, you know, obviously there's been a lot of chest thumping here in Nairobi, and, you know, the mood on the ground has not been reflected, it has not been synchronized with that announcement. And it's really an FX situation. If you go and have a look at the Angolan Kwanza currency, it has been the worst performing currency in Africa, you know, bar none. So what you've had is really a currency adjustment, which has propelled Kenya above Angola. And then, of course, the double whammy of the very low oil price wasn't helpful. But I would say that if you strip out the foreign exchange overlay, Angola is probably still the third largest economy, given the size of it in the oil and gas sector. And I think it's more a function of the Angolans doing what Egypt did, letting the currency overshoot to the downside in order to reach an equilibrium point and then hopefully get people piling in on a very cheap currency play.
Okay, a little bit later, Ali, we'll talk about this South Africa approaching the IMF for this about 4.5 billion US dollars, and what does it mean for the GSE? The GSE has been a very sterling performer in recent weeks, and particularly in the month of May. The rand has also tried to give the dollar some pushback since March, the peak of the whole coronavirus. Give us a minute. Let me just bring on my other two panelists for this morning conversation on Frontier Opening Bell. Thank you very much. Uche Nabin is from Blue FX Nigeria. Good morning. Just to have you on the show. Uche. Okay, let me also welcome Luke Ofojebe. Luke, thank you very much. The team lead in charge of equity at the Tifa Capital. Luke, thank you very much. You're welcome to the show.
Good morning, Boason. Thank you for having me today.
Great one. Let's take about a minute or so to look at Nigeria and the West African markets. With the Nigerian stocks softened a bit towards the weekend, a bit of a sell side. Meantime, good news.
Thank you for having me.
AFDB is okaying about $288 million in COVID-19 economic support for Nigeria. That's one big story for Nigeria over the weekend. Meantime, at the end of the month, EcoBank International will be hosting his annual general meeting in Lagos, June the 30th, but says the meeting will seek to withdraw the resolution to consolidate the shares of ETI. So let's talk to this about a little bit quickly. Luke, what's your play on this?
So for what we saw on, at the Nigerian Stock Exchange last week, Friday, it was more of profit taking. It's not like investments were completely bearish on the market. I mean, for some time now, we've seen a number of these stocks rally before Friday. Say, for instance, Nigerian Breweries has gained over 100% over the last 2 months. So it's just what we are seeing right now in the market is just more profit taking. So this week, are we going to see more of that? I don't think so. I think we'll actually be seeing more bargain hunting this week because the profit taking we saw last week was really significant. And more so, given the fact that OPEC recently met and they agreed to extend their cuts for the month of June. So that will actually support oil prices in the coming months. So we expect upticks in the equity market. However, maybe after like 4 trading sessions, when we see like significant gains, we might just see a repeat of what we saw on Friday. So investors might begin to take profit again towards the end of the week. But in terms of overall outlook for the equity market, I mean, looking at what we are seeing in the oil markets right now, everything is looking positive. But let's not forget that there are still other factors that can actually drag the oil market. We have, for instance, improving production from Libya. The two factions of government in Libya were able to reach an agreement yesterday, and the expectation is that we might be seeing production increasing from Libya going forward. And more so, we are seeing shade WTI prices in the oil market getting close to $40 per barrel. And with the improvements we are expecting going forward, it can actually go beyond $40 in the coming days. So that means that shale producers who initially stopped producing due to tough business climate might begin to increase production going forward. So that can also reduce the impact of OPEC cuts going forward. So on that basis, we might not see that rapid increase in oil prices in the coming months like we've seen lately. So we might be seeing like just light improvement in oil prices. So we might not see that support for the equity market in the coming months. But however, in the meantime, we think the buying sentiments will be sustained in the coming weeks.
Okay, thank you, Luke from Vertiva. Chena, just give us a minute of your, what's your reading of the OPEC meeting on Saturday, the decision to keep output cuts among members for another month. Is this something we can just relax and go home and have some nice time with oil with prices around 40 for the Brent?
Right. I think the decision to extend production code, as I mentioned when we discussed about this, is basically the concept of front-running the possible risk that might come into the market. OPEC really can only control supply. And they have looked at it and realized that demand is far, far beyond their reach right now. So what they are doing is, rather than sitting back and relaxing that oil prices are recovering, they also continue to provide that supply constraint to do what they can in terms of handling that variable, that part of the dynamics that come to oil prices. So yes, I think it's a wise decision. But as I said, there is too many bleak, should I say, risk that can come in when it comes to oil pricing, and that in itself is a big deal. And OPEC is really just hoping and assuming that risk are sort of kept subside, so that that should not continue to should not weigh in on oil prices. Because if that should be the case, if we get anything significant that affects any form of consumption with oil price, it's really going to come up and look worse than it was a month or 6 weeks ago.
Okay. Okay. Well said, Uchenna. Let's touch in Uchenna. Let's touch in a bit on the Southern African markets. My point is about the fact that the GSE is down about 44% from its low on March day, I think, and even that's on the equity side. But on the bond side, even South Africa junk bonds were back in demand due to the high yields. Like I said earlier, the rand is about 10% against the dollar since May started. So I'll put this three together for us on the what's driving the equity side, the bond side, the rand against the dollar in SA.
So Boyson, out of all the sub-Saharan African markets, the one market which has the largest appetite for international investors is South Africa. The rand trades, I think it's the 9th most traded currency in the world. It is not commensurate with the GDP, it's commensurate with the appetite. So typically when people want to take on risk, they will look at South Africa. And what you were pointing out to was those lows we saw in March, I think it was. That was when it was climactic selling. Everyone was getting out. And typically South African assets are very high beta. They overshoot to the upside. They overshoot to the downside. And that was the sort of climactic selling point in late March. And since then, obviously, if you've timed it right, you've had a double boost. You've made money on the currency and you've made tremendous money on the stock market. So I think now I would be reluctant to think there's, you're now playing, you missed the major move. The question is, do you hang in there? Is there more of a move to still come? And I kind of think that the market rebound, I kind of agree with what Uche was saying about oil. I think we've had a very, very fierce V-shaped rebound in the markets, primarily driven out of the US. And I'm not convinced right now that there is much more to go for. So I would be reluctant to have my foot on the accelerator across these markets. I would be, if you've made good money, I would be taking some chips off the table.
So let me ask you, Luke, do you think, Luke at Vetiver, do you think the investors were a bit over exorbitant in trading African markets last month when you say the upside to the fixed income, to equities, to some currencies like the rand and others, even small markets like Namibia in Southern Africa, I've seen 41% jump in its all-share index.
So at the end of the day, it's just a thing of data, really. Also, given what the data is pointing to us, I mean, we are currently facing the pandemic, but the impact on the impact of the pandemic on different regions of the world is actually it varies. So when you are looking at what's happening in advanced economies, we've seen economic activity being dragged as a result of COVID-19 spread. And although some of them have started easing down their lockdown measures, we are still seeing like business activity still way below what it was before COVID-19 pandemic. Then when you are looking at what's going on in African countries, especially in sub-Saharan Africa, it's more like the impact is not as strong. The impact on the economy and on the welfare of the people is not as strong as what we are seeing in other parts of the world. Say, for instance, the lowest death rate, the lowest contagion rate is actually in sub-Saharan Africa. And that's why a number of these investors, both FPIs and FDIs, believe that the African countries will be able to curb the impact of COVID-19 quicker than the advanced economies. And that's why we are seeing capital being taken to a number of these countries, and that's what's supporting the financial market. Going forward, I think we'll just be expecting more of it. The only risk that these investors are watching out for is the foreign exchange risk. I mean, in the case of Nigeria, there is still fear that if oil prices move much lower than initially expected, we might see foreign investors still turning their back at us. But for a number of African countries that have like something close to a free flow system for their exchange rate, we might see strong interest from foreign investors in this market. And
Okay, so let me
let's
ask.
look at even in the fixed income market. So let me just quickly say this: even in the fixed income market, you have rates close to zero in advanced economies, and here in Nigeria, you have rates about 11 to 15 to 13% here in the fixed income market. So it's also an attractive point for investors to come in. The only fear is just a possible devaluation in the naira going forward. And do we expect that? I don't think so. I think the CBN going forward will be strategic about its management of FX, given that we are now seeing improvements in oil prices.
Okay, a nice one. So we'll talk about free float and the exchange rate risk as a major concern for investors in a number of African countries. So take us quickly to the, let's go to the North African markets, the Egyptian. When you talk about exchange rate, I'm sure Ali will think about Egypt. The IMF board has okayed a 12-month, $5.2 billion standby deal for the macroeconomic stability of the biggest economy north of the continent. So Ali, in 1 minute, how much of the exchange rate play or FX play do you think comes into the consideration of everybody asking IMF for money? Will this be a supporting issue, a supporting point for Egypt? Will it be for South Africa?
So yeah, that's a very interesting point, because the Egyptian pound, which had actually behaved very well, has been sliding a little bit in the last few sessions ahead of this IMF announcement, and I'm expecting it now to stabilize and to improve. But typically the IMF tends to prefer currencies to be freely floating and has a bias towards weaker currencies when it starts its programs in order to give the economies a boost, an FX-related boost. So with respect to Egypt, a big commitment by the IMF, 5.2 billion, but Egypt has been a darling of the IMF for a number of years. And the stock market, it looks, so to me, Egyptian assets look to me to be ready to actually rebound more than other African assets right now, because they've underperformed the performance. With respect quickly to South Africa and the Rand, I think you've already had a huge rebound in the Rand from levels above 19, and I think the Rand is now running out of steam to the upside. So I would be more cautious on the Rand. I prefer to be long the Egyptian pound, short the Rand right now.
Okay, so wrap this for us. Let's start with Luke from Vertiba Capital. What's your take for this week the Nigerian market?
Okay, so this week, what I said earlier still stands. I expect bargain hunting in the equity market today. So that's mainly going to be driven by the two factors. One, improvement in oil prices due to the recent agreement by OPEC members to extend their cuts in the month of June. So we expect that to support oil prices, and that also supports trading sentiment at the Nigerian Stock Exchange. The second being that on Friday, we saw significant profit taking. So we saw prices of a number of fundamentally justified stocks declining by the end of trading session. So as a result of that, we think the number of these stocks will offer attractive points for investors to come in. So we see investors picking a number of these stocks, and that will actually also support the prices of these stocks going forward. However, by the end of the trading session, given the fact that if you look at the macroeconomic picture for Nigeria, it's not really that great at the moment. I mean, we are still dealing with the impacts of COVID-19, for CAPEX spend for this year due to lower oil prices. So we have a number of domestic factors that have actually dented the macro outlook for the Nigerian economy. So the strategy for most domestic investors right now is to take positions in stocks when they see these stocks trading at very low prices, and when they see like short-term gains over 1 or 2 weeks, they begin to take profit. So if we see stronger bargain hunting this week, it's likely that towards the end of the week, we might be seeing some pockets of profit-taking activity at the end of the week. But overall, we expect the Nigerian stock markets to advance week on week by the end of the week.
Thank you so much, Luke Ofojebe. Ali, I'm sure I want us to look at the front page of the newspapers in Dar es Salaam tomorrow.
Well, let's hope they do some trading in Dar es Salaam, because I think that really caught everyone on the hop.
I'm not sure they're going to run the same story tomorrow morning, but let's see how it looks like.
They're quite strict in Tanzania. They probably won't be publishing tomorrow, you know, knowing the president might not be so happy.
Keep an eye on that for us tomorrow. Keep an eye on that on Dar es Salaam front page newspapers tomorrow about the stock market. Thank you, Ali. We appreciate your time for today. Uchenna, can you hear me? Just about in 30 seconds or so, what's your take on the currency, the bigger currency plays, the dollar, the euro, and the pound?
Right. Generally speaking, a lot of should I say effect coming from investors sort of affect those currencies. We can see the US dollar trading in that zigzag mode at the moment, but generally speaking, we still think about the US.
Let's just wrap it up on this note, gentlemen. Let's come back tomorrow, same time in the morning, to chew over Frontier opening bells and some of the big stories across the continent that you need for the trading day. Thank you so much, Ali Khan Sacho, Rich Frontier Management from Nairobi, Kenya. Thank you so much, Luke Ofojebe, the team lead equity at Vertiva Capital Management here in Nigeria. Thank you so much, and Uchenna Minis of Blue FX Nigeria, the managing partner. Thank you all. I will see you again tomorrow morning here on Frontier Opening Bell. I am Bosi Namafa. Do have a wonderful day, and I'll see you on Tuesday. Bye for now.